Welcome, this is Dinome. I think I found the reason why S&P 500 and the stock market is just going up and up and up. Despite we have the global pandemic, we have the riots and the protests in the United States, and we have economic collapse of major economies around the world. But the stock market is just printing green candles. Why? I wanted to find out, and I think I found the most simple answer that I've heard yet. That's why I wanted to share with you guys. And if you like this kind of content, hit the like button, subscribe to the channel, and let's get started. And before I reveal what is the reason for the stock market keep going up, I want to show you a tweet that pretty much summarizes what's happening in the world. Dave Column here says, the major cities are all on fire and the futures are only moderately green. What kind of a global catastrophe is required to get a serious spike in the futures? So people are losing their trust in the stock market. And as you can see, this is becoming an internet meme already. Like whatever bad thing is happening in the world, stock market is just printing a green candle. And it makes absolutely no sense. It just means that the stock market has decoupled from the real economy. And whatever is happening in the stock market is its own world now. And let's get to the reason now why it's happening. And before I give you the information, I want to show you this. So this is an article from 2019, and it says corporate America's debt load is nearing $10 trillion. And it's sounding an alarm in 2019. And so corporations are taking a lot of debt. And here's another piece of the puzzle. And this is from Investopedia from March 16 this year. Why would a company buy back its own shares? And here they summarize that they want to increase the value of the company and to look financially more attractive. And on the negative side, they say here that these types of stock buybacks are typically financed with debt. So on this article, it says that corporations have more debt than before. And here they say that companies are buying back their own stocks. Okay, and the final piece to the puzzle comes from the Federal Reserve website. So you can go to the website federalreserve.gov/monetary policy/reserve-rec.htm, and you can see the reserve requirements for banks whenever they want to give out a loan. So if they want to give out loans worth more than $127.5 million, they had to have 10% of this capital inside the Federal Reserve Bank in holding vault cash. So what it means is that banks had to have some sort of reserves to give out loans, to give out debt for corporations and to people. But now if you go to this website, this is the live version. And if you see something interesting here, the reserve requirements are 0. And this is simply crazy. So there's an old saying like, show me a motive and I will show you a crime. And this one here is the motive. And this one here, the stock buybacks, is the crime. So what it means is that banks no longer have to have any reserves to give out infinite amount of debt. So they can print as much money as they want. They can give out as many loans as they want without any reserve capital. So they can basically just type numbers into your bank account if they want to, and now you have some debt. And the crazy thing is that, as you know, the debt, we are at 0% interest rates. So the company executives, they are responsible to increase the value of the stock, right? That's their legal responsibility. And the companies have a legal responsibility to give profits to the stockholders. So what it means is now we have an incentive for the company executives to exploit these reserve requirements. So they will take as much loan as possible to keep making the stock go up and up and up. So even though some of these companies, the debt is not shown on their balance sheets. But I believe it's not too hard to make shadow companies to buy your own shares back, because as we know, companies are already in tax havens. It shouldn't be that hard to use like dummy companies to buy back their own shares as well. And I believe that's what's happening. I don't have any data to prove it, but as again, this is the incentive and this is the crime. So the companies are just buying back their own stocks. That's why I believe the stocks are going up. And the reason it's possible is because of this. So this is the Fed funds rate, basically how much interest you have to pay out for your loans, or how much interest the banks have to pay out for your deposits. And currently we're sitting at 0.05% interest rates. So for the companies, if you take out a loan with 0% interest rate and your company share goes up 10%, you basically made a 10% profit between the debt and the company price. So the incentive here is massive. But of course, this is not sustainable, not at all. Like if you think can go on forever, no way. It has never been possible, and it will not be possible even now. And this chart here shows the interest rates from 54. And as you can see, the interest rates have been higher in the past, and we can even look data from much longer ago. So here this chart starts from 1350 from the Dutch perpetual bonds, and as you can see here, the interest rates were 8%, and on Genoa Republic the interest rates were 4%, and when they went down to 1.1%, which was the low, it immediately spiked back up. And here is the UK perpetual bonds, which were like 4%, 3%, and it went to the low of 2.2%. And then immediately after, again, we have the rally in the interest rates. And here was another low, 1.9% in 41, and immediately after we have the massive interest rate bull run. And now we are at the historical low, the lowest low we have ever been historically. And what I predict will happen from this is usually interest rates are raised to combat inflation. And currently we are still in deflationary environment. So the value of your dollars are on average going up compared to the value of other things. And in inflationary environment, the value of your dollars will go down compared to other assets. And once we get out of this deflationary environment, when people start using the money again, and we get to the inflationary environment, then the interest rates will go up again. And what do you think will happen to the companies that have been stocking up on debt to keep their shares up? Do you think they will just be okay to start paying 1% interest rates or 2% interest rates? No, they will have massive problems from that. And what it will mean when the interest rates start going up, it means that companies that have stocked up massive amounts of debt, they will go bust. And then we have a big financial crisis again. So this is not going to be pretty. And people are waking up to this, and they want to hedge against this type of inflation. They want to hedge against the manipulation of the stock market. That's why typically people have gone in these situations to buy gold and silver or land. But nowadays we also have cryptocurrencies, and I believe like this will affect the fundamentals of Bitcoin and other cryptocurrencies that have fixed monetary supply, and people will flee in masses to anything that has a fixed supply. And that's why I think Bitcoin will have a massive bull run. And here we can see also in Glassnode Studios that if you look at the addresses with balance more than 1 Bitcoin, you can see the addresses are just going up and up and up. So Bitcoin, there's only 21 million Bitcoin in the world. So it's a fixed monetary supply. And the last Bitcoin will be mined by 2140, so 120 years from now. And it's deflationary currency, and people are now just, they are fed up with this manipulation that's happening in the stock market, and that's why Bitcoin is a good hedge against this type of policies. Also, gold and silver are also where people want to invest in these type of situations. But when more and more people wake up to this, the house of cards will collapse, and then we will see another economic collapse as well. And yeah, even though this has been rising, it can still continue to rise. But when the inflationary environment start kicking, and when these interest rates start to reverse, and people lose confidence in the US dollar, oh my God, that's gonna be an interesting times as well. And let's see if we can squeeze in more bad stuff into 2020. But I think this can be maybe 2021, 2022. But anyway, it's coming. Investing into Bitcoin and other cryptocurrencies may be a good idea. I have made videos what are the best cryptocurrencies in 2020, in my opinion, so you may want to watch that video. For you guys who wanted a Telegram group, let's get to 1,000 subscribers first, and I will make it happen. And thanks for watching, and comment your ideas and opinions down below in the comments, and I will see you in the next video.